In this video, we're going to talk about the falling stock market and how everybody is getting kicked in the ribs. We're also going to look at the charts. I'm going to tell you where I think we have support, and we're going to look at a great company. We're going to talk about the chart and where I was going to buy. I was also going to place a cash secured put. We're going to talk about that here in this video, so stick around. Hey, welcome back everyone. It is time for another red hot covered call video. Well, hey, look, the markets are tanking, and I'll tell you what, it's a yo-yo, right? We're up 1,000 points one day, we're down 1,000 points the next. It's volatility at its best, and I'll tell you what, man, Wall Street loves it. Do not get this twisted. They love playing this high volatile stock market. They can get huge swings, making their entire year in this 2-week period. Now, we have uncertainties in the market, and you know how I feel about uncertainty in Wall Street. These days, Wall Street takes their profits in pennies, and that's what they're doing. They're also using this volatility to pick up some short-term gains to the upside. And we're going to talk about one stock today. I'm going to highlight Disney today because I almost bought 100 shares of Disney. I almost sold a cash secured put. We're going to talk about why I didn't and where it's going from here. Now look, before we get going, if you've never been to my channel and you like what you're hearing, I want you to subscribe to the channel. It's right there and it's free. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. And what we're doing is this, we're talking falling stock markets, but I'll tell you what, man, if you go over to Facebook and search CTP Dashboard, that's where I post up most every day. I always love the comments and what you folks are doing. It's a like-minded community. It's off YouTube, and I want you to go there and follow that page. Man, I love hearing what all of you are doing in these times of flux. So I end the week last night, headed up to Oracle. We watched Kiss live. Man, it was a boyhood dream for me to see Kiss live. Absolutely remember growing up listening to Kiss, man. I actually had the albums. I played them on my little mini record player. Man, I played them till the needle broke. Man, celebrate the good times in these down markets. Don't let the down stock markets get to you. Because like I've always told you, man, the markets can ruin you emotionally. Look, we need to make good decisions and understand that this too will pass. That's my man Spence right there. You know Spence. We hit every major concert, man. Love when it's a guy's night out hitting the concert. Now I'm going to show you where I'm at with some of my trades. Like I told you last week, man, I'm using the volatility. I'm using the TQs to make some serious premiums. Now, I don't advocate anybody to use the TQs. It's a 3X leveraged ETF, so you better go to YouTube and you better do your research, get your financial education, and understand what a leveraged ETF is. Now, I'm going to play that directional swing in the stock market with a leveraged ETF. And the TQs for me is the one I want to use because it follows that tech-heavy NASDAQ. Look, when they sell them off, it is going to be nasty. But when they run them up, that is a great opportunity to use the NASDAQ to get some nice volatility to the upside. Man, they will move this thing in 100-point swings. Now, in the case of the TQs, they move this sucker in 10% swings every day. It seems like it's been a yo-yo, man, up 10%, down 10%. You have to have a cast iron stomach to be playing 3X leveraged ETFs. But as you can see, I'm using the cash secured put quite a bit here. I did buy 100 shares of the TQs, and I did write a covered call. I love that covered call because I put out a little bit of time. Do you see where it's April 3rd? I went ahead and bought the shares at about $83.50. The stock was moving so much, man. I end up writing the covered call at $82.97. I end up doing a 30-day, getting $9 for that. So cash on cash, this is over 10%. This is how I want to play this market. You know, I'm going to take very measured amounts of money and I'm going to put it towards this market. In this case, I took 8,300 and we put it towards 100 shares. I get paid $9 or over 10%. Look, if I'm going to set my money to the side during this volatility in the stock market, you better pay me. So getting 10% in this very short 30-day window, that is the kind of trade I want to make. Remember what I said last week, I want to use time to my advantage. I ended up picking up some serious premium with those, some 13 points on cash secured puts for $7,800 and $9,600. I mean, when you look at those from a percentage standpoint, those cash secured puts are returning some 16% in a 4-month window. Extrapolate that out to an annual, I am knocking it down using volatility. Now, an upward to sideways market, we're not getting those kind of returns. It's the volatility right now that is jacking up the put premium. See, when the stock market goes higher, those call premiums are higher. So we want to write those covered calls. We want to have the stock move higher, right? So we get that stock appreciation and we get the premium. That's where we're looking at that 3 and 4%. But when the markets are falling, those put premiums are higher because the likelihood that this sucker is falling, man, they're jacked up, we're getting paid, and that's the important thing. Now, with that said, let's not lose fact of what I'm doing here. I wanted to own 400 shares of the TQs, all right? So I'm not going to use all 400 shares worth of money right here. I'm going to do this very measured. 100 here, 100 there. And as you can see, I started this when the TQs initially fell from over 100 down to 96. Now I'm guessing nobody thought we were going to get into a full-blown correction. So that $9,600 is sitting there all by itself. Now the markets fell again. I did another cash secured put, I think when the TQs were trading at 70. And then I did another one when it rallied to above 80, and here we are. So again, what I'm trying to stress to you is we can use the volatility. We just want to do it very measured. Now, I'm doing 100 shares. Doesn't mean you have to do 100 shares, but just understand what you're getting involved in. I'm telling you what, 3x levered ETFs right now are just absolutely off the chart with volatility. Be careful out there. I have my emotions in check. I have had success with the TQs. I do know how it trades. So be sure you're measured, you're disciplined, diversified. Man, you can really make some good profits in this market uncertainty right now. Now, I'm showing you a 2-year chart on the S&P 500. I want to give this a little bit of perspective here, okay? We have had various virus scares over the past 10, 20 years. And what we need to understand is when we're in the eye of the hurricane, right, there's chaos. And the way I see it is this too will pass. Now, with that said, we're going to feel the short-term pain because Wall Street has run this sucker up to all-time highs. So the numbers are so big now when they sell it off. So when we see a 1,000-point down day, you're thinking this is a crash, right? Well, when the Dow's down 1,000 points, when it's trading at 30,000, think about it. It's only 2, 3, 4%. And when the Dow was up 30% last year, let's put this in perspective. This is an opportunity for Wall Street to sell off. Let's get that on the table, right? They are using this opportunity to take profits, right? I'm sure all throughout last year they would have loved to take profits, but nobody did. This market was trading sideways to higher. Nobody wanted to have FOMO, the fear of missing out, of going higher. Well, here we are, time to take money off the board. Now, one thing I want you to understand, and this is what I've been thinking about, the Federal Reserve came out in an emergency move and slashed interest rate by 0.5%. Okay? I believe they may have wanted to do that to keep the economy going. So when they come out and use the coronavirus fears to slash it to keep the economy going, well, I'll tell you what, that was not a headline story, right? The Dow's down some 1,000 points. That little action, if you think about that action, that really tells a story. Right? We could talk about the news media and how it's getting spun, this, that, and the other. And trust me, I'm not making light of it. There are real people sick, and more people are going to be sick. But here's the deal. When the Fed takes that kind of action, we really need to take focus on what's happening, right? So when that happened, I'll tell you what, man, that told me that chances are we're going to see a double bottom in the S&P 500. Wall Street loves to find the support, right? So they're looking for that double bottom. We get that initial pain of the sell-off, right? The very first sell-off, and man, it gets to a support line, and we get some buyers, right? There's always going to be somebody out there that looks at a sell-off as a buying opportunity. And we got that. When the S&P was trading about 2,800, you see these buyers stepping in. And this is where we're getting the 1,000-point up and down day. Well, as we get into the second week of the correction, look what happens. We are now testing that support line. This is the double bottom bounce for which I believe we're at a critical point here. If Wall Street believes that there is nothing but earnings pain coming, this is where we could sell off. However, I think if we can hold that S&P 2,800, we might get that support and get a little bit of rally here. Now, the stock I'm going to highlight is Disney because I spent a lot of time thinking about Disney this week. For me, Disney, like HD, Home Depot. Remember last week's video, I presented HD to you. HD was trading around 217. And although I had bought HD at 217 about a month before, wrote a covered call, made some good money on that trade, I didn't know if HD was a good deal. I mean, there's a lot of talk in the disruption of supply chains. So I'm thinking HD might not be the best trade at 217. Well, I was completely wrong. The very next day, HD rallied some 11 points, man, and I felt like I missed an opportunity. But what goes up will come down, and HD peeled off some 8 points. So I still might be able to get into HD. But I'm looking at Disney because Disney is one that a lot of people love. I played Disney years ago, back before they bought Lucasfilms. I'll never forget, I bought it around 97, man. I was trading it. I knew Disney would go higher. Now, I ended up holding it for months because this thing was getting slammed with all the news of its networks not making money. So even though they buy that fabulous brand in Star Wars and Lucas brands, they had Marvel, I mean, everything pointed higher. They were just getting killed. And you could see back here, man, it just traded sideways. I got out of Disney back then, always wanted to get back into it. But then when Disney Plus came out, rocketed to 150. I pretty much took it off my radar because now I think it's fairly valued. It's over 200 billion. I don't know where it goes from here. But what I want to show you is that 5-year chart for perspective, okay? Look at where Disney was and where it has gone. And look at where it has peeled back. Let's take a closer look at this. Let's take a 2-year chart here and look at this. Look at how Disney has weathered all of these sell-offs. And do you notice something there? That support line. They have sold it off to a very sweet support line. Now that line is going to be about 113. So I'm watching Disney at 113. And when I put in a bid to buy Disney at 113 when it's trading at 113.50, the markets are down and I'm thinking the market maker's just going to come in and take my bid. Well, that didn't happen. And as you can see with the markets down, right? The markets are down yesterday. Disney gets a bid. The point here is this. I always tell you, we want to buy great companies. It's a part of the golden rules of covered call writing. We buy great S&P type companies, right? Companies we want to hold. Now, Disney is a $113 stock, and they start to rally this thing. It's now up on a day that has seen red across the board. So what's the greater stock market telling us about Disney right now? One, they're saying, look, man, at 113, this thing has fallen from 150 down to 113. Now, the way John sees it is we need earnings to really paint a picture for us because Disney collects 40% of all of its profits from its amusement parks. Now, I know they don't own the amusement park in China, for which China closed, but that could be the canary in the coal mine, right? If people are not going to the amusement parks, Disney is affected tremendously here. So I'm sitting back, okay? I'm sitting back at this point. I want to make a measured purchase. And that's what I'm going to do. I'm going to look at the various support lines and see where Wall Street wants to buy Disney. And then I might deploy some cash. Now, I didn't buy Disney and I didn't write a covered call on Disney. The reason we're talking about this today is because these are great companies that have fallen. It's a great opportunity to buy great stocks cheaper. Look, that's what I've always told you. Had a friend way back in the dot-com boom and bust. I remember when stocks were crashing, I was buying all these flaky little stocks thinking I knew what I was doing. He told me, look, use these opportunities to buy great stocks cheaper. And that's exactly my mindset now. During this market crash, what I've done is I bought 100 shares of this great company, 100 shares of that great company, right? I've written covered calls into the rallies, and then when they peel off, I'll buy the option back cheaper. We're literally talking days. But see, I don't sit on my hands. I make good decisions, and I know it's more active than most, but that's what I'm going to do. And for me, I enjoy it. So I'm not fearful of this stock market. I'm not fearful because I've seen this play out time and time again. And the only way you get there is if you get your financial education, you understand the markets. You understand that if you get your experience, right, you feel it, you own it, I'm telling you, you'll be better off for it. Now look, in the next video, I'm going to talk about the great stock I did purchase and the covered call I did write. I'll tell you what, man, these times can be trying on your patience and emotions and your judgment, right? A lot of people, myself included, you think you've done your homework. You think you're going to make a good decision. only to find you grabbed a falling knife. Hey, I'm in the hole some 30 points on PSX, man. Unbelievable how that thing has fallen off. Now, I haven't sold for a loss yet, and I believe it's going to come back. But now I got to add a little bit of time to the trade. And I will, because I have patience. See, when we sell premium, this is the offshoot of selling premium. You get that built-in patience that I always talk about. Because we have to buy the stock and hold it for 30 days, we have that patience. And we see stocks move up and down. And it starts to take the edge off of the feelings, right? We'll see a stock move some 10 points higher, 10 points lower, but because we're holding it for 30 days because we wrote a covered call, it starts to numb those moves, right? I remember owning Alibaba and this thing's moving in 20-point swings. But I wasn't affected because I knew I still had 30 days left on a covered call and it might finish at my strike price or higher. So it's about having patience, making great decisions, but more importantly, keeping your emotions in check. I get emails all the time where you folks are in trouble. Look, man, step back and make a good decision. Hey, look, we are going to talk about that great S&P type company I bought last time and the covered call I wrote, man, knocking it down in this time of turmoil. I want you to be safe. I want you to be healthy. But more importantly, I want you to have your emotions in check because I really would hate to hear that this market is wrecking you. Hey, look, if you like what you heard today, I want you to subscribe to the channel. Bang that like button. It lets me know you like what I'm doing. Ring the bell because when I do that next covered call video, I want you to be a part of it. And remember, go to Facebook, search CTP Dashboard, and follow our page of like-minded community off YouTube discussion. Hey, look. Until next time, may all your covered calls be profitable.